morning, traders. This is Blake Morrow, and you're listening to the FACE webinar. Dale Pinkert is out today, so I'm going to be hosting, at least for the first half an hour of today's webinar. So it's been a while since I've actually hosted a webinar. So it's nice to be here with you guys. I'm actually going to open up the Q&A panel. Dale is out for personal reasons. He'll be back tomorrow. So just letting you guys all know he's okay. George says slacker do the whole thing. No, nope. I'm not going to do that. Anyway, hey, so we just real quick, couple things that have been happening today. First and foremost, I don't know if you guys have seen this dollar yen. This dollar yen is breaking this downtrend line. Now, I was short the S&P yesterday, and I closed it out yesterday evening. There was a story that came out about how basically the Trump investigations are picking up steam, and it was an article by the Washington Post, and whether you guys believe it's real news or not real news, it affected the markets last night, and the stock markets came under pressure, and I pulled off my my short in the S&P. I was short here. And as that story came out, I closed it as we hit this support, and I'm like, yeah, I'm done with it. But the markets came back under pressure in European trade. Now, the reason why I point out the dollar yen is because the dollar yen is actually trying to break higher, and if the dollar yen breaks higher here, it could drag the S&P up as maybe a little bit of a recovery. And so, and I'm not short the S&P right now, nor am I in the yen pairs, but I did want to point that out because I was actually short the euro yen overnight, and made like 30 pips in this one overnight. I already covered it. Covered my New Zealand yen. I was short the New Zealand yen as well for the last couple of, well, actually since yesterday afternoon. And I closed that following the New Zealand data, but you got to be careful that the stock market might get a little bit of a lift here. We might get a little recovery. The markets are, regardless of what the market is doing, like the stock market is doing at the moment, the one thing that I know, and I know you guys know this as well, it's extremely buoyant. So these sell-offs that we see here tend to get bought up, especially when you're in you go into North American trade and you got the markets under a little bit of pressure. They tend to bounce. So we might get a maybe a 5 or 7 point bounce in the S&P. I think longer term, what we're trying to do here in the S&P is develop a top. So I am willing to sell into strength at this point, and I probably will in the first couple hours today, especially if we get a rally back towards, let's say like a 7 or 8 point, maybe 10 point rally in the S&P. I'll probably be looking to sell into strength, but that doesn't mean that we won't, rally a little bit here. And so you got to think about from a currency market perspective, what are the implications of that? So if you get a rally in the U.S. dollar Japanese yen, which looks like it's going to happen, especially with the favorable data that we saw today out of the U.S., then the question is what else is going to go up? And the currency pair I want to bring to your attention right now is the pound yen. All right, now the pound dollar, it was really strong this morning. Actually, I own a little bit right here, like literally bought some right here about. I want to say about an hour ago. I own it at 127.42, so literally right where we're at right now. The reason why the cable rallied is because the MPC was expected to vote 7-1. 7-1? Is that what? 7 to 0 to 1. Anyway, they're expected to vote.
Yes, Blake. That is right.
Yeah.
7 to 1. Yes.
Yeah, that was expected. Thanks, Steve. I was just thinking off the top of my head, and the vote.
Good morning, by the way.
Good morning. The vote changed to 5 to 3, and so that shows that the MPC is starting to shift towards a more hawkish bias. Now that was the pound rallied as a result. I was long the pound New Zealand and pound Aussie, and if you guys know that I've been buying them down here because the pound New Zealand gave us this little hammer the other day, and it didn't. It actually avoided my stops, which I was pretty happy about, because I was able to capitalize on this move higher. And then the pound Aussie too, I have my stops just below this 200-day, so it just avoided my stops by maybe about 20 pips overnight, and it rallied back. Anyway, I took those off the table and I re-entered those long already. I think I'm up like 25 pips in the pound New Zealand already, because I bought it again maybe about a half an hour, 45 minutes ago. And I'm playing the pound back to the upside because I think that this was a pretty big shift in the MPC. Now you have to, you guys, I want you to take a step back and think, go back, 10 years. The Fed has, and through financial crisis, through ground invasions into the Middle East, the Fed has always been on the forefront as far as adjusting monetary policy ahead of most central banks, and I don't think this time is any different. The Fed is starting to normalize rates. So as they normalize rates, the question is, well, what are other central banks going to do? They're going to probably start to normalize rates as well. So if you see that the dollar is trading heavy and you wonder why the dollar is trading heavy, typically that's the reason, because when you go in a rate hike environment, which we are in, where we're starting to see bonds come down and rates go up, what that does is that influences other central banks to start wanting to normalize policy as well. That's why I think that the dollar, even though it's bullish right now, or at least it's trying to be bullish, with the dollar is up against some resistance here. Even though the dollar is trying to be bullish right now, and we might have a couple of days of upside in the dollar, maybe even a week or two of upside in the dollar, I think ultimately the dollar is going to come right back down again, because what you are going to see is you're going to see other central banks that want to normalize rates. I think if you look at like the Swiss National Bank or the Riksbank that want to eventually get rates out of negative territory, those are the ones that I think are going to be the plays for long their currency. Like the US dollar Swedish krona, I'll tell you guys right now, I'm not long, meaning I'm not short the US dollar Swedish krona. This is a currency pair I want to be short. I want to be short US dollar Swedish krona. Now, not right at this very moment. I would venture to guess that we might have a week or two of a rally. I'd actually more prefer here. My chart's a little messy at the moment. I'd more prefer the. Let me get rid of that. I'd more prefer a move back up to this 200-day moving average right here. I'd prefer a move back up here to the 200-day moving average to be on the short side of the US dollar Swedish krona, and I'm hoping that happens because here goes the S&P. You can see how the S&P is starting to recover too. Like I said, the fact of the matter is you get some of these other central banks that want to try to normalize policy. I got asked this morning from one of my trading partners at the firm that I trade at. He's laid up in bed right now. He's getting back surgery, and he got long the Aussie New Zealand, which I can talk about the Aussie New Zealand here in a few minutes. And he goes, "Hey Blake, how's the Aussie New Zealand act in a rate rising environment?" And I said, "Well, I don't think it's going to have much of an effect, but I do believe that the RBA is going to be more apt to normalize rates ahead of the RBNZ. So with that being said, I think the Aussie will continue to outpace the New Zealand dollar." And he's like, "Okay, great," because he's a macro trader, and he really think he's one of I would say he is the best trader that I know. He happens to be laid up in a hospital right now. and he, he agreed with me, after some debating about all this, that's right. And the RBA is another one of those central banks that is going to want to normalize rates, because they try to stay up with the curve of U.S. rates as close as possible. I think the reason why their hesitation has been recently is because the impact of slowing China. But I think that slowdown in China is going to probably have more of an impact on the RBNZ moving forward. Is the RBNZ is going to be, they want to raise rates to slow down their housing market, but I believe their housing market is going to slow down to a point where they're not going to be able to, they're going to want to try to keep rates a little lower moving forward. Anyway, we're talking a much larger scale, but going to the Aussie New Zealand, how many of you guys are long the Aussie New Zealand? Anybody here long the Aussie New Zealand? Wow, a lot of you guys. Ooh, man. Okay, good. I'm currently long the Aussie New Zealand. I sold the Aussie New Zealand last night. I had a sizable position, one of the larger positions that I've had all year, long the Aussie New Zealand going into yesterday's data. It was a double whammy. As I had explained yesterday, the New Zealand GDP numbers were expected to be really strong, stronger than previous month, and they ended up being stronger than the previous quarter rather. They ended up being stronger than the previous quarter. They just weren't as strong as had anticipated. So the Aussie New Zealand ripped because New Zealand GDP came in at 0.5% versus 0.7. Then the other outlier was the market was expecting the Aussie employment to come in still gaining jobs, but much weaker than I thought it would be, and so I thought that there was a chance that the Aussie employment was going to beat expectations, and the New Zealand GDP was going to miss expectations, which that both happened. So it was a really big swoon for myself, and obviously for a lot of you guys and gals that were long the Aussie New Zealand as well. So that was great. Now the question is, how did I trade it? I exited most of my position at 30, where we're at right now. I exited my last bit of it at 55 last night, like literally like right here, or 50, excuse me, 45, excuse me. I exited my very last piece of it last night before I went to bed, and then I put in a bid to buy it again at 105.10. So I went long. Now, I'm not long as big of a position as I was. I have a hard time double dipping in the market, but that Australian data was so good last night that I wanted to make sure I got an opportunity to get back in. And if you guys don't know this, here's a little, here's a little food for thought. Whenever you get moves in Asia, more times than not, and I say more times than not, like maybe 7 out of 10 times, 8 out of 10 times, 6.5 out of 10 times, more times than not, whatever happens in Asia gets reversed in Europe. So this is Asian trade last night, and I'm like, okay, well, I had such a huge position in the Aussie New Zealand. I just exited the whole thing, and then I'm like, okay, I'm going to put in some bids down here on a pullback, and fortunately I got hit. So I'm in about half the size I was in before, and I still want to be in, because I actually am looking at the Aussie New Zealand, and I think first stop on the way back up is 106, which is here, just if you don't know what I'm staring at. So see this fib that I'm moving here? So the first stop is going to be at 106, which is previous support. That's a 38% retracement. I think ultimately we can get to 107. Maybe even 107.70. Looking out that far away, it's hard to really gauge, because you have to think about, there's so many other things that can happen in between, and I always joke that I have a hard time just trying to figure out what's going to happen 15 minutes from now, let alone what's going to happen 2, 3, 4 weeks from now. But in order for us to make it back to like 107, 108, those types of prices, we have to see continued deterioration in New Zealand data and improvement in Australian data, which, I think there's a good chance of that happening. So You know, will we get all the way up here? Hell, who knows? But I think that at least the first stop, is going to be this this down sloping trend line here, this 38% retracement that comes in around 106. By the time we get there, it's probably going to be around 106. So that would be my assumption where we're going initially. Where we go after that, you know, like I said, it's going to be more. Oops, I drew this all yesterday, so I have to excuse my crappy drawing here. So I can do it like this. So, you know, ultimately, I still think we're going higher from here. I just, you know, I don't know if it's going to be today or probably in the next week. Realistically, I would assume. I'm just making assumptions here. I would assume if you guys aren't long the Aussie New Zealand, I'm assuming we're going to do something like this going into Friday. So. You know, we might bounce around here a little bit and then make a stab higher going into the end of the week. But I think the Aussie New Zealand looks really good. It's going to have a nice, as long as we can close relatively bullishly, we are going to probably have some pretty nice looking candles going into the end of the week, I would assume. So good for you guys. I think it was a really good, you know, it was a good risk reward. Back, you know, earlier this week when we were getting long around the 104.50 level, although I've been long at 104.50 for the last week and a half. I mean, the risk was below 104, targeting 106. I mean, that's good risk reward. Where you're at right now, you got to be a little bit more diligent about how you approach risk. Okay, at this stage in the game. You know, for those of you guys that are long like the pound New Zealand, I'm long this one too. We've broken through this down channel, which is nice. With that, you know, with the favorable, you know, MPC vote today out of the UK, I do think we can the 38% retracement as well. If you look at this fib here, also comes in at 180, which is a lot of previous support down here. You can see it's a pretty big level from way back when. This is this blue line. Do you see it? So 180 is going to be probably a big stopping point on the way back up. You know, you're at 177 right now. You know, talking 180. You got another, you know, 250, 300 pips to go, I think, to the upside. So you know, I'm going to trade it long as long as we can stay outside of this channel. We dip back below in this channel, and I'm not going to be too happy about being long. The other thing about the pound, and I want to tell you guys about the cable and talk to you guys a little bit about it. The pound dollar was and is in a situation now, and I know I talked a little bit about it yesterday with Dale and with Steve here as well. We are faced with a what could be a soft Brexit with the UK elections, and so the pound came under pressure the last couple of days. But I think, and I mentioned this yesterday, I think this pound selling here is really being suppressed because of the fact that we might have a soft Brexit. So, and how about, and I pointed this out yesterday, how about the risk of not having a Brexit? How about if Prime Minister May steps down, and next thing you know, Brexit is off the table? Could you imagine what happens with the pound after that? I mean, I think that's kind of a really far cry of what is going to happen, but I think the risks are there. You know, whether it's a 1 in 5 chance, maybe 1 in 6 chance. Hey, I think it's a risk. And you know, if you're short the cable and that happens, and you know the institutional side of the market is pretty short pound right now, we could be trading in the mid 130s really fast in a situation like that. Now, I'm not saying that's going to happen. I'm just saying that the risks are there. That's why I think the pound sell-off following the UK vote wasn't, you know, like I was reading some analysis from Citigroup. We're following like the following couple hours after the UK vote, and their first question mark on the analysis that I read was, why isn't the pound trading at 124 right now? Right, yeah, because I mean, you saw the sell-off following the UK election. Why wasn't it trading down here? Well, there's a reason, and I just pointed those out. But those are really, some of the risks that are, I think, involved. The cable. That's why I think being short the pound right now is dangerous. I mean, you gotta, a mixture of, the Brexit might not be as aggressive as you had thought. It might be a little soft. You have a MPC. Now, I know you got Mark Carney at the helm, who's probably just as dovish as Janet Yellen, but, you have an MPC that you can see the tide turning a little bit. And the UK, like the US, or the MPC, like the Fed, has been in quote-unquote emergency low-rate environment for a long time, and we don't normally get a situation where the FOMC and the Fed has a higher rate than the Bank of England. It doesn't happen, So I mean, could the MPC really consider normalizing rates quicker? Sure. So anyway, I think the risks to being short the pound right now are quite high. So you got to be careful being on the short side of the cable, in my opinion. And you're going to get situations where the pound comes down 100 pips intraday because some headline hits the market. I'm talking more on a longer term scale. Yeah, like you couldn't right now. That you couldn't pay me. I wouldn't even trade with Steve's money short the pound right now. Ha ha ha, that was a joke. But anyway, but Steve, does all that make sense?
Absolutely, Blake. I personally am not a true believer yet of a long pound against the dollar, just against the dollar, because I see a risk of a reversal here. But I wouldn't be short either anymore for the simple reason because even if the thesis is correct, why would you want to be short what you expect to be the strongest of the pairs? You know what I mean? And I totally agree with you. I mean, today's vote from a macro perspective is a big deal because finally, after ignoring it for so long, the MPC committee has decided to recognize that the increase in inflation in the UK does not seem to be transitory. And how long could they keep ignoring it? I mean, in the beginning they said that it's transitory, but now it seems that it's sticky. And since their mandate has to do with inflation, they need to do something. And I believe that if they were purely thinking on their mandate, they would have already hiked. But they take other considerations in mind, like the huge risks, as you mentioned, that Brexit poses, because nobody knows what's going to happen from here. Nobody. I mean, one day we make speculations for a hard Brexit, then something happens that was not even considered. I mean, think about how many things have happened within a few weeks. Make calls for snap elections. The market is pricing in a landslide victory with a huge parliamentary majority. Within a few weeks that gets reversed. She barely manages to make a minority government with DUP, and now who knows how long she's even going to be the Prime Minister and what happens from there and how that will end up influencing. As you said, with the Labour having more strength than they had, perhaps they can influence for a softer Brexit. Personally, I doubt that it's going to be very easy for them to cancel Brexit all along altogether, because simply, as you very well know, the vote for Brexit was a very close one. On one hand, but on the other hand, the people that were pro-Brexit were, kind of hardliners, and those people, I think, are going to rebel if they try to reverse the popular vote having to do with Brexit. So I think that reversing the process of Brexit is a very, very long shot, as you mentioned. But getting concessions and seeing a softer Brexit in the end is something that can happen. The other day, was it yesterday or the day before yesterday, there was, a Financial Times posted, for example, that they have a plan in mind to make it very easy for European citizens already living in the UK after Brexit. So as it seems, the UK is already starting to make concessions to hope, on the other hand, that the European Union is going to be as soft and as cooperative as possible, because they need to sign a lot of new agreements for them to not have a real damage to their economy and their trade.
Well, okay, so there's a thank you, Steve, for your comments. There's a couple, there's obviously we have a lot of people listening from London, and like Anif says, Blake, Brexit will happen. I don't think it's going to be soft in any way. I live in London. It's interesting, like Nigel, who also is in the UK, right near London. And I know Nigel personally, says risk of non-Brexit is low but not impossible. Soft Brexit more likely, but risk is European zone sticks their heels in and says go to hell. And that's interesting that he says that. The comments from Macron over the weekend, was it this weekend, saying that basically, hey, you don't have to do this. You can still quit now, but if you start, it's over. And I think that that's like a kind of like a divorce, or hey, I know you want a separation, but listen, if you separate from me, we are getting a divorce. But you have an opportunity to stick around if you want to. I think it's going to be interesting, because if you start rolling down, if they start really rolling down the Brexit, road, maybe perhaps the EU does dig in a little bit. I don't know.
Blake, the French people and the French politicians have always been the softer voices in the European Union and in the Eurozone. Same thing, if you notice, is happening with Greece. I mean, the French are the ones that are always willing to make more concessions with the issues, surrounding Greek debt, etc.
True.
But France is considered the number one and the number two power in the European Union after Germany, of course. But they always, no matter what they initially say, end up voting and backing whatever Germany says. Always. Yeah. I cannot remember a single exception to this rule. And sorry if I'm forgetting something, but even if I'm forgetting something, it's just going to be what I said, an exception proving the rule, nothing more than that.
Right. Greg, who also is in London, who is also a friend of mine, he says, Blake, there would be revolution here, blood in the streets. It would be carnage, anarchy. We will Brexit. You only have to see the reaction on TV or radio talk shows when the subject of remaining comes up. We will Brexit, in my opinion.
Watch your Twitter stream. Have you seen the pro-Brexit people? How?
Oh yeah. Oh, they're yeah. I mean, yes, yeah.
Yes. So imagine those people, which are a majority, right? I mean, even if they're not a majority anymore, they're definitely a critical mass of the population. They're not going to let that go. And you know something? Regardless of if we agree or disagree with Brexit, first of all, it's their decision to make. There's no question about it. That's how democracies work. And second of all, that was voted democratically. That's it. You only get one chance to make it right or wrong, and that's what they decided.
So I got a question from KH, says, Blake, are the Greek gods singing for the S&P? I would say if this S&P gets a little bit of a rally here, yes, they would be singing to me, and I'm looking to sell any rally in the SPOOs right now. Steve, I know you're gonna take over for the Open. Thanks. I didn't mean for you to come in, for the Open, before the Open, because I know you're going to be taking it at least for the next half an hour. But I am going to pass it over to you, Dale. For those of you guys and gals that do not know this, Dale will be back tomorrow. He's out for personal reasons, so he'll be back. And if you guys aren't ForexAnalytix subscribers, make sure you take your trial today, and then download the app while you're at it so you can get all of our updates on mobile. So Steve, I'm going to pass it over to you. Thanks everybody for being here with me, and are you? Can you grab the screen because I don't know who you're logged in as.
As Dale, mate. So I had to open
okay.
yes, but I can do that for sure.
Okay.
Okay,
Great.
guys and girls. Today I'm also going to be the host from this point on. Thank you very, very much, Blake, for opening the webinar.
My pleasure.
Okay, the good thing is that we have a lot of things to talk about, a lot of things. And I see Nick. Are you here? I think Nick is with us as well. She might have something to add, but yes, I'm going to look, Arif, I've seen it, I'm going to look at silver, but before we look at silver, let's take one class of tickers at a time. So I know you want to see a lot of things. Blake already was kind enough to, to show very important tickers, especially in FX following the vote yesterday, the Fed interest rate decision yesterday, and we already saw this, the DXY, but I'm going to go to stocks first before I return to FX. I'm just showing this. Okay, this is what I'm seeing in the DXY. We had an ascending channel, we broke it, then we retested the confluence of this descending channel and the previous ascending channel, and we got rejected. We reached the bottom of the channel, but we still had RSI divergence. We warned yesterday that the risks for a dollar rebound following the decision are tilted to the upside. We made that quite clear, and this is what has happened up until now. In my opinion, a daily close above 97.50 will at least lead to a few days of rally, at least, and we see how we take it from there. The only sure thing, because we made no comments about that, is that I don't know which of you and how many of you watched Yellen's press conference, because for me that was the most important thing. I even discussed that with Blake after it was over. It was more than obvious, despite some few phrases and sentences that could be interpreted, in a dovish way, which of course they're the Federal Reserve, they will always leave open the door, for monetary policy getting easy whenever is needed to support the economy, blah, 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 blah. But the point is the following. They are absolutely, obviously determined to follow the rate increases path they've already opened. Not only that, not only we didn't get a dovish hike as many expected, but Yellen on her own initiative decided to discuss about her need to prepare market participants, I'm using her own words now, for a balance sheet reduction, for the beginning of a balance sheet reduction. That is extremely important. This is the first time after so many years that the Fed is actually communicating that they want to drain liquidity out of the market, while they've spent so many years doing the exact opposite. Now, my friend Ures made some very good comments having to do with he actually wrote today to me, and yeah, I'm sure he would be fine with it, although he's a very humble guy. He wrote today, and I'll read you the passage as he wrote it, that simple theory, take it at your risks, people missing the big picture here, a lot of macro guys as well. Normalizing balance sheet is negative for equity markets. I said this yesterday, if I'm a fund manager with large exposure to equity, your portfolio has done well and valuations are stretched. Fed knows offloading 2 trillion is not easy unless offered at discount, as people are not keen on loading up on USD. So if I'm that fund manager, I would want to get in that piece of US Treasuries balance my portfolio by reducing exposure to equity. Wait for a decent correction to load it up. Simple investment theory and what I have been taught. And he's absolutely right in his thinking and description. The canary in the mine having to do with stocks, and if you remember, we had a look at it with Dale a few days ago, actually it was last week, was this. And this is the FTSE 100. Okay, of course you'll tell me this is being influenced by local factors as well, but it doesn't matter. We've had a wedge. We broke below it, we retested it, and then we have completed now head and shoulders topping formation, and we're headed lower. Now, you remember that we were looking at the NASDAQ several times. I was very lucky to be short from 5,835. I got very close to my stop loss, like it was, I think, 17 handles from my stop loss when we reversed off this channel. And we are currently testing the bottom of this ascending channel. At the same time, this also confluences with the 61.8 of the rally that started off that Wednesday sell-off, which means that NASDAQ, for example, is currently at a very, very critical juncture. A close below, roughly, let's call it 5,650, opens the door for a much, much bigger loss. SPX, I see an ascending wedge as well here. It's you know, holding up a lot better, and as long as 2,400 is holding price action here, obviously there is no real argument to be made to be short, but definitely seeing what happens to other stock markets, DAX as well, by the way, and keep in mind the euro is going down today. The euro is going down today, and the DAX is going down along. That's not the usual behavior from DAX. Usually we see an inverse correlation. So, and keep in mind this zone has been tested multiple times and it keeps failing. So DAX is also overbought, as you see. There is no question about it. We had an ascending wedge. We even had an overthrow of it. So in general, I see plenty of stock markets that are sending warning signals. So be very careful here with risk. I don't know what the trigger is going to be. Is it going to be, for example, what we saw yesterday, as Blake mentioned? Is it going to be a Trump escalation of the investigation? Is it going to be something else? Who cares? You know what I mean? The market, the importance is if the market will find something it is worried about, so then it take advantage of a trigger and, you know, starts moving from there. And, you know, we're getting close to that point. I'm not saying that you shouldn't be bullish yet, but this is now a point that you should be very cautiously bullish, very cautiously bullish. We had a look at some stock markets. So, you know, there is a clear warning coming up here. And it's time we look some Forex pairs, because I think it's very, very interesting. First of all, Euro USD. Yesterday, it was an ideal price action. We had 1, 2, and we were missing, as Dale would say, for a 3-drive formation, one more touch of this wedge. We got that yesterday following the CPI, the weak CPI numbers from the US. We got a perfect retest and a new high. It was barely, but it was a fresh high. Perhaps some people got trapped there, and then we got a, you know, we got a very nice reversal, and today we are testing a very critical zone because we've already penetrated the ascending wedge. We are penetrating the ascending channel, and now we're testing this critical zone, which is at around 111.40. A close below there undoubtedly is bearish for the Euro USD in the short term. If you remember, for those of you attending for a long time, I was bullish the Euro pairs for quite a long time ago, but I'm not bullish anymore the Euro USD, at least not in the short term. So, you know, if we see a retest of, let's say, this zone and a good reaction, we can discuss about it again, but I wouldn't be long the Euro USD at this point, no matter what. I actually think that it's in danger. I was short the pound, as I mentioned yesterday, twice. You can see the pound here. I was short when we retested the day following this candle, the retest of 127.70. I booked like just 30 pips of profit. Then we had a retest of 128. I went short again, but I completely now dumped my positions because I don't want to be short the pound USD anymore. Simply because following today's decision, I don't believe that the pound is the best pair to choose against the US dollar if you actually want to be long the dollar. I mean, I'm looking at the possibility of a reversal for the dollar, and I'm already short, as you very well know from yesterday. I even tweeted about it. We talked about it. I was short from 72.20, the Kiwi. I had a stop loss above 72.60. It was actually at 72.70. As I said yesterday at the webinar, I decided to pull out my stop completely because I saw the move we had, because I was a strong believer that this thing is going to reverse. So instead I added twice my position, one more time my position at 73. So my cost average was at 72.60, little, if 61, 62, something like that. And because I strongly believed that this is completely unsustainable, this kind of an ascent within this tight channel. And luckily I even made a pattern in play for ForexAnalytix being short at 73 yesterday, and luckily having the GDP, of course the New Zealand GDP and the dollar reversal both helped. And in my opinion, a close below here, below 72 today, is going to bring more weakness. I'm expecting that the next stop is going to be 71.50. It was the previous 50%, but we also see some lows here in the market, so I'm looking for at least that level to perhaps then take profits on half of my position. So Kiwi, huge reversal. I think that we should see some follow through. This move higher is probably warning that it might have another leg, but not yet, not yet. So I'm a firm believer that we're going to see more weakness. Regardless, I'm in the money now. I'm going to manage my position appropriately. Of course, Aussie could not stay out. It's not as weak, and that's why we also saw that nice move in. I'm not going to go over Aussie Kiwi because Blake was kind enough to show it and explain all his thinking process about being long, etc. But I'm going to tell you that the daily candle we see like a tweezer top here in Aussie USD, so it's likely that we're going to see a correction here as well. A zone to pay attention to if we actually break below here is this one, which is roughly 0.7510. So you should watch that level if tested for support. Obviously yesterday we barely avoided a huge breakdown in USD CAD as well. We're talking about this trend line. We were below it at some point. Then with the dollar reversal, we actually managed to close right on top of it. And today we're seeing a further rebound, which is testing this important zone. It's very important to notice what's going to happen from here, because if we see another rejection from here, that's going to be bad news for the USD CAD. And it's going to be. By the way, we were talking about strong and weak pairs. Along with pound, CAD is one currency I would not want to be long USD again. So, I like to be long US dollars against some currencies, but definitely the Canadian and the pound are not two of them. So, if you want to be long dollar, which I understand why you would want to do that now, the risk reward is there. I would advise against choosing those two. For now, they seem to be the strongest. So now let's have a look at the metals, as everybody's asking. Okay, let's have a look at the metals. Let's start with gold. Okay, gold is in real danger here. I do not like the price action yesterday. It's extremely bearish. We saw a very strong rebound from an important zone. I'm pretty sure that a lot of people got trapped in perhaps establishing fresh long positions even near the highs yesterday, and penetrating through 1265 today is bad news. There is one more zone I'm watching, and it's at 1245, not only because it's the 61.8, but because it has acted as support and resistance, sometimes in the recent past. So definitely dangerous price action here if you're long, because the more distance we're taking from the double top, the more possible it is that this was actually a double top. Gregor?
Where is Gregor?
I knew I heard you. Okay, we have Gregor with us. So Gregor, I'm going to have a fast look at silver, and then I'm sure you have things to share for being here. So
Yes.
Go ahead and share with us. Silver. I remember, I think it was our friend Arif that said, nice spotting of the zone of a rebound yesterday. And then we were exactly at the middle of the 1720 zone. And I told him that, listen, yes, I'm not involved with it. We had a strong rebound, but be careful because we're currently testing another important zone. And especially if we get a strong dollar reaction out of the Fed, which I had made a strong argument for, that we would see that the chances were for a strong dollar after following the Fed, because the market was pricing too much dovishness to come, and I wasn't buying that, to be honest. I said be careful because we might have a rejection from it and back to this zone, and that's exactly what happened, and we're back on this zone. We briefly penetrated intraday, but we're holding it for now. So nothing changes. As long as the 61.8 at 1665 and this zone hold, there is the argument to be made. I had drawn this price action, several days back. There is the chance that we're going to see rebound. But I have to tell you that I'm worried. I'm not buying here, to be specific. I don't know if that's a good pass for you, Gregor. I mean, I don't know if you want to start by having a look at the metals, since I was just having a look at the metals before you go over whatever you want to see.
Actually, I'm quite on the sideline of metals. I'm not really sure where.
Me too. I was long silver, as people here know, from the lows. You remember that as well, because we had discussed it. And I booked all my profit in two parts, actually. Because I didn't like the price action. I booked half of it here when we saw that dodge here. Then we moved higher, and then I booked the other half almost at the same place. I booked the first half when we were breaking below this ascending channel. So I'm not involved, and I don't like the price action. I mean, I'm not inspired to be long again. But on the other hand, I cannot find myself being easily persuaded to be short as well. So I don't know if you can provide more clarity through your Elliott wave analysis.
Actually, I'm looking at two wave counts on two different wave counts on.
Okay, you want me to give you a screen and
yes,
show us?
Sure. Okay. Sound is okay?
There you go.
Okay.
The sound is fine. Yes.
Okay. So you can see charts.
Yes, now we can.
Okay, perfect. Actually, which charts? Because I have 6 screens and
I can see Euro USD 4-hour chart and Euro USD. I think it's a 1 hour.
Okay. Yes. So actually, on gold, based on correlated markets, it's very frustrating for me to look and consider bullish case for gold, even if I still have a valid wave count here. The fact is that the dollar index is really looking to turn to the upside. So at the same time,
we agree on that. If you heard my,
yes. And actually that's my only concern. So I'm still observing this second count with one eye here on the right. It's potential to see lower levels for this wave C, especially if the dollar will continue higher. I think that we just have room for much higher levels. We broke out of this ending diagonal.
You know something? I don't know if you've noticed, or if you have happened to be here when she has shared her opinion, but that second wave count you have there is exactly the same thing Nick is seeing, but through harmonics. So I have to tell you that your count 2 from an Elliott wave perspective is Nick's main scenario from a harmonics perspective.
Actually, and I really like this second wave count as well, but the fact is that this first leg was very impulsive as well from 2015, so it's either start of a trend or either part of a flat. Okay, so both counts for now are valid, and the reason why I cannot confirm any of it yet is because this decline from June or July 2016 was not impulsive, as you can see yourself. Okay, so this is the only reason why we cannot.
You're skeptical.
Yes, because actually we can turn into some kind of a big triangle here with different views. So from a trading perspective, I'm really not favor of metals at all. I just rather to focus on more clear patterns. Also, there are 10-year US notes, as you can see, are turning to the downside.
Correct.
Since yesterday, and this should have huge bearish impact actually on gold. So at this stage,
but by the way, now that I remembered, sorry because I forgot to say it before, for ForexAnalytix member, Grega uploaded on the relevant tickers a very nice midweek update video on the Elliott wave part for, remind me Grega, it was for Euro USD, USD CAD, oil, pound and dollar. Am I correct?
Dollar CAD, I think.
Yes. Right? Dollar CAD, oil, Euro USD, GBP USD, and DXY, correct?
Yes, exactly.
Okay.
Actually, I can show this where they can find it in just a second. Do we have any guests today?
We had, but since due to personal reasons, Dale couldn't host a webinar. He postponed the interview. So, feel free.
We don't have anyone.
No. When we finish covering analysis, we're gonna stop it. By the way, you briefly showed there in your screen. If you see our patterns in play, they're almost all of them now short the dollar. There they are, and you know all of them. Sorry, long the dollar. I mean, yes, short other pairs against the dollar. Yes.
Yes. Actually, so what I want to show the subscribers or other members where they can find this video update. Actually, if they click and go under Elliott Wave tab, I don't know why it's lagging so much at the moment. Probably it's because of my connection, because I have too many softwares open.
Yeah, might be the case.
So actually, here's week video update. Here should be a video now shown up. Okay, so subscribers can check the video here. Okay, and it's the same video actually posted, as you said, under crude oil, dollar CAD, cable, and also, which one? Too many videos.
Okay, so what do you want to show us? It's very clear. I mean, you're conflicted currently having to do with the metals because you see two different counts, and your main bias, from what I understand, conflicts with your main bias that has to do with the dollar and the treasuries, correct?
Yes. So 10-year US notes are turning to the downside. I expect more weakness. Euro-dollar is following the same path here. So I just think that metals could see even more downside. But because pattern is still somehow bullish, but it's not confirmed by other markets, I would stay aside. Okay.
If I'm correct, Grega, you are more bearish the Euro USD than I am. I mean, am I right to assume that your main count is that we actually have now seen a major top for now?
Yes.
And not a short-term top?
Yes, I just think that we could continue lower into wave D. Let's just make a brief look at this longer-term chart. Let me open both of one. Okay, so actually here I have one chart which shows that we can be here in a triangle of this black wave 4. Okay, so actually it can be, we can remain and stay sideways here, or if we go a little bit higher, we can still see waves, completion of waves 3, 4, and wave 5. But the thing is that why I'm considering to see a turn to the downside sooner is because of this formation. It's a very powerful
ending diagonal. It was a clean ending diagonal. Yes, we had discussed that some days ago.
and not only that it was clean ending diagonal and that we have seen a reversal. The most important is what kind of a reversal it is. It's very strong, very sharp. If this reversal would be slow and not so impulsive, then yes, maybe this would fit and as a pullback within uptrend, but as it stands right now, it's still only first leg down, and which means we should continue lower after into wave C or wave 3 after a temporary bounce, corrective bounce up into wave 2 or wave B. We don't know which wave it is, but from a trading perspective, okay, I think it's very clear pattern, and I will personally be tracking these pullbacks very closely. Also, this trend line could react into a nice resistance.
Retest, right?
Yes, but there are some situations where you get those unexpected reversals that are very, very strong, and it's very hard to get in. So actually, I'm already tracking one of the wave counts here on intraday basis. Let me update it real quick. Here on the right, you can actually see that there is a chance that we are already in the middle of an extended wave 3. Okay, so actually this suggests that pullback may not be so deep like I'm expecting here on the primary count back to this trend line resistance. So it depends how we close today. If we will continue to weakening on the euro through the US session, and
yeah, we will never see a retest of the ending diagonal support.
Yeah,
yeah.
So I think that the US session, the price action for the US session.
But by the way, guys and girls, I have to tell you that Grega, did not come up with this view for whoever was here just right now. He was a strong believer of this reversal, and he has actually made the pattern in play being short from 112. So he was a real believer of the USD reversal from an Elliott wave standpoint since weeks ago, actually.
Yes, I was, and actually I'm still thinking that we will, as I said, see more and more weakness here. Also, while I like this reversal, as you know, we reversed and tested from 1.13, which was
a very important level.
Yes, back in November when Trump won the US election. So once again, this level proved to be very important, another spike and another sharp turn down, and we need to, even if we will see only a corrective pause, only a free wave decline, there's still room to make money on the downside to trade for wave C or wave 3. Okay, so, but from a trading standpoint, we need to see a pullback, especially those traders who are not in the trade yet. Chasing here right now, it may not be a good idea because the risk, as you can see, can be very huge. So definitely, I suggest to wait on a pullbacks if we get it. Okay, so that's for euro dollar index. Obviously, is the same situation. Cable, are you still short cable?
No, cut the second position as well. I ended up making very, very few pips both times. But you know something? I'm happy after today's MPC that I actually even made anything, because as I said before, I think due to dollar strength, the short cable thesis might still work just fine. But considering the alternatives of currencies, I would rather be short other currencies against the USD at the moment. I still see, from a clear technical perspective, the 128 zone has held the rebound. This zone is around 128.10. It's like between 120 and 120. So yes. I have no technical reason to dump my shorts, but I'd rather find another pair if I want more USD long exposure. I would choose something else besides the Kiwi.
Yes, actually, Kiwi is very...
By the way, you know something, Grega? I forgot to show today, and I think that you can show it for me. Guys and girls, I consider today's change in the MPC vote a very likely confirmation that Euro-Pound is headed lower again. I don't know what's your view on that, Grega.
Yes, but I just want to mention that euro-dollar shorts, like you mentioned, that cable shorts may not play out so well that some other markets, some other pairs could act much better, and euro pound could be one reason why maybe euro dollar could be your choice.
Yes, I actually, sorry to interrupt, but I actually tweeted when we got the decision, I tweeted that euro will get its final push to rolling over due to pound strength. So you know very well that the euro pound is the third most liquid currency pair, and I believe that euro pound rolling over is also going to help your short euro USD thesis.
Yes, definitely. Actually, we have seen a very nice reversal here after probably market cleared some stops above this level, this swing high from start of the year. So actually it was a new test of the yearly highs, and now we are turning. So it appears that we can be headed lower because in this leg, which I see it as a wave C, final leg of this counter-trend bounce is actually already made by 5 waves here on.
Yes, that's what I want to say. It's a clear 5-wave higher.
Yes. And I have been tracking this reversal zone for a while, and since we came out very, very nicely to the downside, I just think that there is potential for weaker euro pound. So euro dollar shorts definitely in such case should work better than cable shorts, but actually both could work out.
Yes, there's no question about it. But but why not being long the dollar against the weaker of the two, right?
Yes, exactly. Actually, here we have so far very nice reversal candle, as I see. Let me just zoom this in.
Is that a dark cloud cover? Yes. Yes, this is a dark cloud cover actually.
Yes, actually tomorrow on Friday close, I think this could be a very, very nice setup for next week if we stay bearish here. But euro dollar just ticking at a new low right now, so I just think there will be more downside coming on euro pound as well. Euro just look very, very weak, or I should say dollar looks very strong since yesterday. Actually, no one probably expected this dollar index to clear some stops or euro dollar to the upside ahead of FOMC meeting. So actually reaction was very muted. If I take a look on dollar index. So I think that this is a very nice bounce. Here I want to show where we bounced from. Actually in a complex corrections.
Double zigzag.
Yes, ABC X ABC. Notice that where we bounced from this equality level. Okay, so first zigzag. Okay, this is first zigzag was equal to second zigzag in distance. And I think that there was a very nice reaction to the upside. So based on longer term perspective, I think another confirmation would be for stronger dollar if we get above this trendline resistance. Okay, and rise above 98.50. Okay, this would be even more important.
And you know something else, Grega, if we ignore, which sometimes because they don't completely ruin the technical picture, I do that. You know, call it from experience, but I've seen it work if sometimes you bend a little bit the rules. If you notice, if you ignore a little bit yesterday's spike,
yes.
This is also looking like an inverse head and shoulders formation as well, right? Look at the DXY. Yeah, that one. Yeah.
Yes, I know. Actually, I usually, when I want to ignore some spikes or nasty price,
I know. You use the line chart, right?
Exactly. And
that's very right. That's a very good point. Look at it, guys and girls. Look at it from this perspective. You see, if you use a line chart, sometimes you filter out the noise.
Exactly.
And look at this. Now this looks like a very nice inverted head and shoulders formation.
So actually, despite very nice run from the last, 20 hours or so, it's this move actually break out of this head and shoulders did not even start it yet. Okay, we are still at this neckline, so a breakout really can really be extended here for a bullish case.
Correct.
Yes.
I agree too much with you. I don't think we should hang out together anymore. Okay, so what else do you have to show us? Because I know that people want to see, and you know, it's going to be nice if you want to show them as well. They want to see some euro and pound crosses.
Euro and pound crosses. Okay.
Yes.
Which one?
Aussie, Kiwi, you know, the usual suspects.
Euro, Aussie. Okay. I have something here from yesterday. Okay, we can see a very strong reversal here on Euro, Aussie, and from that perspective, I would be looking for minimum 3 waves of decline. So I would say that we are now in a wave A.
Even from here, I think that was a 5-wave move up, the previous rebound. Yes.
Actually, I don't have an updated count here. Okay, but maybe this was a wave 3 and we are now in a wave 4. Okay?
Okay. Oh, so you think it's an extended 3 and now you're waiting for a 4. Okay.
I know it's not the best looking structure.
Yeah, it isn't actually.
But what really matters to me the most is that even if I focus on minimum expectations and consider this to be only a 3-wave decline for a wave 4, there is still more weakness coming, because this decline that I also was talking about and tracking this week was impulsive. Okay, so even if you think maybe that we go lower after much lower after corrective bounce into wave 3, and even if I'm tracking and expecting just a wave C drop, there is in both cases there is room for more weakness. So what I would be looking for is waiting on this recovery in 3 waves and then expect more weakness. Okay, because we clearly have 5 waves to the downside, but I'm not really sure.
By the way, the DXY is now breaking 97.50, Gregor.
Yes, let me look at, I see euro dollar also.
Yes, euro dollar testing the zone of no return. I have a horizontal zone there where we currently are in the euro USD.
Yes, and also I think that there's discount is coming more and more in play. This on the right. Right?
Yep. I'm with you.
So anything else? Actually, I don't have anything else, anything interesting. Maybe New Zealand dollar.
Yeah, sure. And then I can show, if you want, and you can give me an Elliott wave perspective, I can show you what I see in the other crosses, pound Aussie, pound Kiwi, that people are asking for.
Actually, here on New Zealand dollar, what I see is nice break below this trend line of this upward channel. So it appears that we are headed lower, minimum in 3 waves, possibly back to former wave 4. 0.7, 0.7050, maybe around there, since we turned clearly in impulsive fashion from the highs. Okay, it's a very strong decline, so I'll be looking maybe even for some setups after a bounce up in wave B, or maybe even wave 2 if we consider some more aggressive bearish cases. Clearly.
Okay, so your minimum expectations is for at least, from what I understand from here, at least another 100 and something points lower. Of course, some short-term rebound should come in the meantime.
Yes, exactly. And actually, this could be a nice setup on the short side against this.
Because you never know. This might actually end up being an impulsive turn. I'm just saying.
Yes,
and not a correction.
Exactly. So in that, if will be this wave 3, just, you know, gains could just increase. But from a trading perspective, if you want to consider wave C and make good risk reward trade, you definitely want to see this wave B bounce before chasing on the short side.
Okay, perfect. Do you have any crosses of Kiwi like Euro Kiwi, Pound Kiwi?
Really. Not really.
Okay, you want me to show you then?
Sure.
Okay, and tell me if you see something, you know, with your sharp eye from an Elliott wave perspective you want to add here. I'll tell you what I'm seeing because people are asking for it, and I'm seeing the other questions that are coming. We're going to go over everything. People, I mean, today is an important day following the Fed decision. The market is obviously shifting. Okay, Pound Kiwi, Gregor. I don't know if you can see, you can spot something. I definitely have an equality of these two legs that we tested yesterday.
Okay, I see.
And what seems a reversal. Now, I haven't gone down to the 4-hour chart to break it down, but I see very likely that this move is a 5-wave if you see.
Yes,
1,
clear.
2, 3, 4, 5, correct?
Very strong decline, yes.
Yes, so what I'm thinking is that this could actually be A, B, C, and that could be easily over, but I don't know what you think of the count of the rebound higher.
Oh,
So,
from that,
so to be clear to our friends watching, I am expecting a rebound from here, but I need to go down to a 4-hour chart, and Greg is the most capable of doing that to tell you if I would be expecting a corrective rebound, in which case, I don't know, I would be looking for resistance around 181, or if, Gregor, do you think that this break higher from here, because that was a huge reversal, let me zoom out so you can see, do you think that was an impulsive move or a corrective move to all this?
Actually, from your lows of, just a second, from 2016 lows, it appears to be a 3-wave move.
I agree, unfortunately. That's what I'm seeing as well.
And that count from your May highs can be labeled in 5 waves, and now we get a bounce back to 1.82, maybe 82.
Yeah, I have 81 in mind actually.
Yes, that
Because
was a region of a previous wave 4. So
yes.
Normally when correction begins, those levels, those zones of a previous wave 4 of one lesser degree are retested. So also I like this, your, what is this green moving average?
It's the 50 and my blue one is the 200.
Yes, actually normally when I see prices or trend trading beneath 50, I say that trend is in bearish mode. If above 50, I said that trend is in bullish mode. So this 50 period moving average could represent a nice resistance as well.
Okay, so you do agree with the thesis of a bounce here, but you do not expect new highs to be reached after that, if I would to summarize, right?
Exactly, correct.
Okay, now look at Pound Aussie. That's very interesting actually, look at it. This was technically perfect in every way. We had a huge ascending channel, huge. We had a clean breakdown from it in a descending wedge. Then the descending wedge transformed to a flat bottom triangle. Then we broke out of the triangle in a channel, and now we're bouncing from the second zone of support I had marked. I don't know if you're seeing something different here.
I'm
This is
also
a daily chart, by the way.
There is also possible to count 3-wave rally from October lows. Yes,
A,
but
B, C.
yes, but this decline from there is not in 5 waves yet.
I know, I agree with you.
Yes, so actually,
You mean that it might not be complete?
yes, actually I would, if I wouldn't be short here, I would not go short here, and for longs I would wait a little bit longer.
No, I agree with you. I'm not involved with this pair yet. I'm starting to nibble in the pound Kiwi because I like it more at the moment, because I like Kiwi, being short Kiwi more than Aussie, and that's why we also have a positive view on Aussie Kiwi at the moment.
Kiwi is looking very, very weak.
Yes, indeed it is.
I think it's even weaker it's even weaker against yen, despite yen being very weak today. As I can see, dollar yen is much higher, but New Zealand dollar against the yen is still trading below 80. I think there is a nice resistance for 80 on New Zealand dollar against the yen. So overall speaking, New Zealand dollar is looking for some sell-off, I guess, larger.
Okay,
decline.
now I need your input in this because I've been monitoring for a long time. And this is USDMXN, and the friend is asking here about it. It's SR. You remember that, for whoever doesn't remember, we had made the blog post up here with ForexAnalytix, and we said that this is a short for various reasons, and it actually worked quite nicely. But Greg, am I right to assume that this thing might be over now? Look at it.
Yes, I would expect. We are at some serious zones of support looking back from swing lows from 2016.
Exactly. Let me also draw it. I don't have it here, but I've written it in the analysis. It's this low. This low.
Yes, exactly.
And also from a clean technical analysis perspective, I'm seeing a descending wedge here. And from a candlestick perspective, today's reaction is very, very strong. So personally, I would definitely not be short USDMXN anymore for no reason whatsoever. And I think it starts to look attractive. I don't know if you agree with me.
Yes, I agree. I see prices completing wave 5 down there.
By the way, I've also shown to people this a very long time ago. I know that most of them don't care about USD ruble, but have a look at it, Gregor. I don't know if you're monitoring it.
Yes, broke some out of some few wedges here, as I see.
Oh yes, and look at it now, taking off.
Yeah, so dollar is really strong across the board. It's acting like it wants to be strong.
There is a friend named Stalin who is begging you for your view in USD yen. Before you give your view, I don't think I've given mine today.
Actually, you can go to the page and show it from there.
Sure, I can do that. But before I do that, let me reiterate what I showed yesterday, and I did show this yesterday. We were looking at it with Dale, and I told him, listen, Dale, I'm seeing a descending wedge. I had already drawn it. And we were post the CPI, and I said, listen, if the dollar reverses here, we're just going to have another test of the wedge. And I told him that, listen, I'm looking to be long if we close above 112, but for me, a break and close above 110.50 and the wedge, and then the descending channel that we had, is going to be the first indication that I actually want to be long. And then for me, confirmation will be given by 112. I don't know what you think about it, Gregor.
I'm waiting on, just a second, I'm waiting also some on a 5-wave rise. Actually,
let me show your chart.
We are just breaking above the trend line connected from May highs.
Here it is, your 4-hour chart.
Yes, exactly. You can see their bullish level. There's an alternate.
And here is your daily chart.
Yes, exactly. So I see this as a temporary pullback and looking higher. If we go to the 4-hour chart, you will see there. Can you go back?
Our pleasure, Jack. Jack is thanking us for our insight, etc. It's our pleasure.
Okay.
Where do you want me to go, Gregor? Sorry?
To 4-hour chart, back to 4 hour.
Of course.
Actually, here you can see that we don't have live prices there, but at the moment, dollar yen is trading already at 110 point above 0.50. So actually, we are approaching now to this wave 4 swing level where I marked it as a bullish level. If we break above it, I think there are odds that we will continue to the upside. So on pullbacks, I pullbacks would probably have my attention to join this ride. Okay, because we also filled this gap from April, as you can see. and turned nicely to the upside so far, especially today. So I think it can be very interesting in coming days for bullish scenario. Also, we broke the trend line. It's not drawing there, but I can see that the trend line from black wave 1 highs is now actually already been broken for nearly, what, 50 pips or so.
Yes, that trend line, yes. Yes.
It's
what I have marked on my charts as a bigger wedge. You have an ending diagonal there. I see that, so you've drawn the lines there, but I've drawn, if you noticed, I have drawn a bigger wedge here. You see it? This one, you mean?
Yes, exactly. This trend line, yes. It appears to be very important. So you can see we are now already above the trend line. Today's close, I think.
Arif is actually asking also for NASDAQ, which probably he was AFK at that moment, because I have already shown NASDAQ. I've told them that I was short since back then, Grega. I was actually very lucky because my stop didn't get triggered for just a few pips, for just a few handles. I mean 17 handles to be exact. And I said that we are currently testing a very important confluence of the ascending channel and the 61.8. But from your perspective, first of all, you agree with my count high, right? Because I had, you know, we had seen it together. Okay, yes, what would you expect downside targets to be according to this?
Downside targets, region of your red wave 4 would be the first one.
So 5,547, yes?
Yes, exactly. But if we go to that level from current prices, then I think we will reach with free wave setback even black wave 4.
Actually, you know something? We can do something very simple here, Grega. Let's grab an extension. Let's grab a magnet. Let's grab the top. Let's grab the bottom. Let's grab the top again. And we have a quality target at 5,516. So even if this is an A, B, C, ideally we should go close to 5,500, right?
Yes, exactly.
Okay, and what would
this trend line should be close beneath this trend line will be probably very important, I guess.
Yes, for sure. Question now, what would be your invalidation level for calling this a true reversal? It's not my main scenario yet. I do believe that this is most likely to prove corrective, but where would you say, okay, we've seen a top and we're going much lower? What level on the NASDAQ would that be for you?
Much lower, let's say on a weekly base, weekly charts, for example, we should probably go.
I can zoom out if you want at the daily.
We should see an impulsive sell-off. Okay, this current lag this current sell-off should then extend back to this black wave 4 with one leg. Okay.
Got it. So you would expect then a 5-wave decline, if that was the case, down to this level. Am I correct on that?
Exactly. Then I would be looking much lower. Then I would say that top is in place and the deeper corrective move is here.
Okay.
Because normally when corrections occur and corrections are made by free waves, they will stop at the regions of the former wave 4. If they will not, if that the region of a former wave 4 will be tested only with one leg, then clearly we can expect that something bigger is behind that move. Okay? So the question is, if we will see an impulsive decline back to that black wave 4, then I guess the important tradable top was put in place. But if we'll get only free wave decline to that black wave 4, then I think it will prove as a correction.
Let me answer within 2 seconds something to Tom. Tom is asking about AussieCAD. Tom, I went over it yesterday, so it's quite boring, so let me be very brief. Within a few seconds I'll tell you the following. We had a triple top in the AussieCAD, and now we've had, for the time being, a triple bottom here. So AussieCAD is trapped in a big range, oscillating between those big levels, and until something else happens, in my humble opinion, there is absolutely nothing you want to do with it. Just, I don't know if you see anything different, Grega, but when I see this kind of price action, I just stay away.
Yes, but it can be some kind of a triangle.
Yes, it can.
But definitely not worth of any risk here.
Yes, I mean, there are so much more attractive things to trade out there, right? Why trade this one?
It's not directional market at all.
Yes, yes, exactly. So, you know, what you always want to do in trading is try to find weak currencies and be short against, be against them, be short using strong currencies, or the exact opposite. So in this case, you know, Aussie and CAD seem to be fighting more or less an equal fight for the time being. So just, you know, just in my opinion, just ignore it and let it be. Blake had a look at it, Greg, and I know you're looking at it. He had a look at it before, and it's not a coincidence. I'm seeing exactly what he's seeing. I'm seeing a very important trend line here. This is pound yen, by the way. I saw an impulsive move higher, and then we had a confluence of the 200 EMA of this ascending trend line and an orderly. Am I right to assume that this is a double zigzag, A, B, C, X, A, B, C?
Yes, clearly there was, you can see in the middle of that decline there were overlaps, a few overlaps. And
so I'm right to interpret this as a double zigzag, right?
Yes, I would say so. And we also gap from April, we are at this trend line support, so there's a chance that market will continue higher. Dollar yen is also up.
Yes, and after what we saw today with the MPC committee, the Monetary Policy Committee of the UK, I mean, obviously turning more hawkish, this is currently one of the pairs I favor and monitor. So, because if our thesis for a USD reversal, and tonight we have BOJ, Greg, correct?
We have.
So if BOJ helps as well, and our thesis about the USD and the USD yen reversal manifests, and seeing today the change of the MPC and the 5-3 vote, this is one of the pairs I really want to be long. I'm going to wait a little bit longer for confirmation, but I really want to be long this pair on a break of a triangle.
Yes.
Of the channel, I mean. Sorry, my mistake.
Channel, yes, but we can be in a bigger triangle.
Yes, yes. We definitely can. So you mean, for example, all this being just a bigger triangle, so getting another rejection and then another test, right?
Of 145.
Yes, but still, those are a lot of pips you can make on the upside still, even if this proves to be a triangle that has another leg down, correct?
Yes, exactly.
Okay.
But on the for the near term, I think that there is higher prices.
Okay.
Coming.
Very nice. Guys and girls, sorry if we, missed some of your questions, but I think that we try to cover like, the majority of important pairs here. Let me do one last. It's a friend is asking about Kiwi CAD. So let's have a fast look at it and then we call it a day. Yeah, I said my opinion about that yesterday. That's a three waiver, correct, Grega? A, B, C.
That's a free wave move, but previous decline was also in free waves.
Yeah, so this Kiwi CAD also in a choppy consolidation. As long as this zone holds, yeah, you'd better not be short, but just find something else to trade, honestly. I mean, why don't you have a look at something that's more trendy, something with more clear technicals? I mean, yeah, I'm happy to have a look at it, but no strong bias here. I don't know if you have any different.
Yes, especially at new traders, newbies. Okay, the biggest mistake probably is that they are constantly looking for trades on only one pair, only one market. If someone wants to be successful, the important is that you spread your instruments, that you focus on more different markets, and rather than trading market, trade patterns. Okay, so you are looking for tradable patterns that can occur in different markets. For example, if someone is trading only FX, okay, it can be frustrating if it's trading majors because, for example, euro dollar did not move much for the last, for the last 2 years. So it's not so tradable on a longer scale. So maybe looking for some trades on other assets could be better. For example, crude oil was also not so tradable. Even metals are also not so tradable. So it's very important for all of the newbies to look for different assets, different instruments.
I think that's what we call, Grega, tunnel vision. It's good not to get tunnel vision. I mean, don't get obsessed with 2 or 3 pairs because, for example, you had a nice successful trade, there some time ago, etc. Just, it's good. That's my opinion as well. Although I know people that successfully, professionals that successfully trade a few markets, but Dale has asked me before, and my opinion is keep an open eye, keep a broader horizon. This will give you more trading opportunities, and this will help you trade only the signals that have more quality in them, more confirmation. Because if you're looking only at 3 markets, you will be constantly trying to take trades on weak signals, because how many strong signals can, let's say, 3 or 4 markets give you? While on the other hand, if you're monitoring many markets, you've seen me doing those months in action. I've traded completely different tickers so many times. You get to see a lot of opportunities and trades that that give you multiple levels of confluence and confirmation. That's what Grega says, and I'm 100% on board with you, Grega. I've said it in the past plenty of times, and I totally agree with the way you view markets.
Yes, definitely. You need to look for when I'm trading. Okay, I open the chart and I have to spot clear pattern in first 30 seconds. Okay, if I see I know that this is potential tradable market because it obviously have a clear pattern that I spotted because I spotted very fast. If I'm looking and making hard wave count, good to looking wave count on it, then I know the market is not clear.
And getting multiple alternative interpretation, etc. Why would you want to be involved with that? It's more or less like coin flipping, right?
Close that market, go and move to the other one.
Yes, absolutely right. Absolutely right. Since I'm not the regular host, so I don't know how to make an epilogue for this webinar, but I don't know if you want to say something, Grega, but we all want to thank you for being here. We're really trying to be supportive and show you the markets. If you want to have real live time updates, and we've got so many patterns in play, that if you don't spot the moment, obviously the risk reward might be gone afterwards. You can subscribe to ForexAnalytix. It's just $1 to get a trial. But regardless, you're always welcome here for us to have a look at the markets. For us, we feel successful if we help you a little bit become better in your trading, and that for us is very important, supporting the community. So have a wonderful day, and we'd be happy to see you tomorrow again. Thank you very much for being over, Grega, for having you here.
Bye. Thank you. Have a good day, traders. Bye.
Bye bye.